Several merger and acquisition deals announced recently, including Salesforce reaching an $8 billion deal for Informatica, Dick's Sporting Goods to buy Foot Locker for $2.4 billion, and e.l.f. Beauty acquiring Hailey Bieber's Rhode for up to $1 billion. So, could this be the start of a renewed wave of M&A activity? Our next guest says there are reasons to be cautiously optimistic that the trend could continue. Joining us now, we've got Marc Cooper, Partners CEO. Marc, it's always great to speak with you. Thank you for making time for Yahoo Finance this morning. Talk to me about what you're seeing and how that's informing your outlook for M&A over the next couple of quarters here.
Well, Madison, thanks for having me on. It's been a pretty good M&A market, as you've just noted, on the corporate side, where the challenges have been is on the private equity side. So I think corporations who are looking to solidify market share, are looking to gain critical mass, see this as a really nice opportunity to acquire at reasonable prices without the competition from private equity. But the real problem, and what's holding the breadth of the market down, is the private equity community is not participating.
And what would it take for that participation to come back in, Marc?
I think there are a number of things. Clearly, there's all the issues that we're dealing with now in tariffs and other effects on economic behavior. But I think to my mind, if you take one issue and say that's the one that's going to drive it, it's going to be interest rates. It's about price. And the challenge for PE is they made a number of acquisitions, a lot of acquisitions back in the 2021 era, post-pandemic, zero interest rates, and they made them at pretty reasonable prices. And it's hard to get back there. And as you know, prices go up with interest rates going down.
Yeah, absolutely, Marc. My guest host, Paul Grunwald, has a question for you as well.
Yeah, hey, Marc, I think you partially answered it. But yeah, I was going to ask the drivers. It looks like the Fed is on hold for a while, right? They're going to be looking at the impact of the tariffs, and the labor market still looks reasonably strong. We don't have any cuts till later in the year. So if that's the scenario, you announced a couple of deals a minute or two ago. Is that just a bump, or are we going to trend higher? Or are we just going to be wait and see and watch the rate market and watch tariffs?
You're going to continue to see strategic transactions.
Okay.
And there's plenty going on. Last year, we had the best year in Salomon Partners history, and it was largely driven by our strategic activity with a fairly modest PE market, where the breadth of the market is, as we know, is driven by private equity with a lot of the deal flow, maybe not the volume, but the deal flow. And when you have 29,000 portfolio companies that are owned in the private equity community that have, I don't know, on average, 6 to 7 year average life, which is far longer than normal, they got to move them out. They got to trade. That's where you're going to see a real surge in the market. Meanwhile, the markets are open. And if I tell you, we look at our business, we look at how much pitching activity, how much preparation with our sell side activity with private equity, it's a lot. The question is, are those deals going to get out there? Are they going to get done?
Well, talk to me, Marc, about one thing that is a potential headwind we haven't spoken about, which is regulatory pushback here. Noting that Synopsys did get FTC approval for that $34 billion deal to acquire Ansys. Does that give you hope that the regulatory potential headwind is somewhat removed under this administration? How are you thinking about that?
Oh, it's going to be far better than what we've dealt with. They've already reinstated early termination, which was something that the prior administration had taken out, so transactions can come out of review before 30 days. And I believe there will be a far more accommodative regulatory process. And I think, by the way, in general, if we think about the drivers of long-term activity, deregulation is a big issue, both deregulation in the FTC as well as deregulation across many of the industries that are subject to engaging in M&A.
It's interesting, though, Marc, because we've heard some mixed messaging from members of the administration about their approach to deregulation. Obviously, the Treasury Secretary is all for it, but then when we've heard from the regulators themselves, they've said things like, we're going to follow Biden-era regulatory practices. How are you getting clarity on where they're going to net out?
I think this administration has a way of influencing the departments to move in its direction. It's just going to take some time.
Well said. I wonder how you think that could impact tariff policy, given this ruling that we got overnight that shuts down some of the president's tariffs. And it sounds like, from what you're saying, that you don't necessarily think tariffs are the big thing on the minds of folks who are working on M&A deals right now anyway. So does it matter where these tariffs go?
It matters. It matters. Where you see activity, particularly in the private equity community, again, is on non-tariff related companies. Because again, when you think about private equity, they have to price risk within a very narrow timetable. They're buying in a 5-year hold. So they got to get it right. And so they have to have clear visibility as to what companies are going to achieve in profitability. Tariffs could have an effect on that. Mm-hmm. Strategics, not so much, because they're thinking 10, 20 years out, and they're looking at synergies. So the answer is yes, it is having an effect. But I think everyone believes that this too shall pass.
And I hear your point on private equity, but we haven't had a chance to talk about private credit. What are you seeing, and how is that impacting deal making?
Well, the great thing about private credit, as I was telling one of my colleagues the other day, is typically, been around as long as I have, when the markets went south, there was no deals because the public credit markets closed. Now, when you have private credit, who is a buy and hold investor, they can price risk. It's just a question of return. So they've been an incredible addition to the M&A market and have kept us going for a long time. You've seen some noteworthy transactions of size done with private credit financing.
Marc, I had a source mention to me, they said private credit hasn't had its true test yet. Do you agree with that? And if they haven't, what's that test going to look like?
The test is coming. So part of the issue in private equity is there's probably a fair number of companies that are not in great shape. Mm-hmm. You don't read about them because they weren't financed in the public markets. They were financed in the private markets. And the private markets sort of kicking the can down the road, hoping they can work their way out of it. The answer is they won't. And like anything else, there are going to be some failures. It's not a bad thing, but it's going to happen. And it's going to affect private credit. We just read today, transaction, in fact, I did 10 years ago at home, just filed for bankruptcy. Mm-hmm. And that was a Hellman and Friedman transaction that was bought, I don't know, a $3 billion transaction, but public debt, and pushed them into bankruptcy. But I think you'll see more of that, particularly as the PE markets loosen up. They get to sell some of their good companies. They get to return capital to their investors. And then they're going to clean up some of the difficult things.
Yeah, Marc, maybe a quick question on what that stress test looks like, right? We haven't had a real kind of classical downturn since the global financial crisis. We had the energy 2015-16, we had COVID. What's the stress test? Is it like a stagflation? You mentioned high rates in a slowdown, or what's gonna sort of drive a shakeout if we get one?
I don't think we're talking shakeout here. I mean, the great news about the market is there was some, exuberance in buying back in the zero interest days in 2021. But we're not talking about having a lot of overhang in public debt. In fact, the biggest overhang was X on the financing transaction that he did, and the private transaction he did, and that's all been sold out to the marketplace. So yeah, there are going to be some losses, but those losses will be in the private markets. I just don't see any systemic issues. The stagflation issue, I just don't buy. I mean, tariffs is, to my mind, a one-time effect. I think core inflation is very much under control. Yes, is it going to bump up because costs will go up a degree, but it will be once. I don't see it as being stagflation.
Marc, I always appreciate getting your insights. They're fantastic, so really appreciate your time this morning. Thank you so much, and thanks, Paul, for joining the conversation as well.